Hello everyone. In this session we are going to deal with risk in investment. Now let's see the meaning of risk in investment. Any rational investor, before investing his or her investable wealth in the stock, analyze the risk associated with the particular stock. Here the actual return he received from a stock may vary from his expected return and is expressed in the variability of return. Investment risk can be defined as the possibility of occurrence of losses related to the expected return on any particular investment. Obviously, the difference between expected return and actual return is called the risk in investment. All of us know that investment situation may be high risk, medium risk and low risk investment. For example, buying government securities that create only low risk. Buying shares of an existing profit-making company, it creates medium risk. Buying shares of a new company that is creating high risk. One important thing is that most investors, while making an investment, they consider less risk as favorable. Now let's see the types of investment risk. We know that there are different types of risk in investment, but studying all these are very difficult. So here we have to study the important types of investment risk that include interest rate risk, market risk, currency or exchange rate risk, liquidity risk, concentration risk, business risk, inflation risk, reinvestment risk, political condition or government policy risk, and credit risk. These are the 10 important types of risk in investment. Now let's study all these type of investment risk one by one. The first one is interest rate risk. Interest rate is the variability in a security return potential resulting from significant deviations in interest rate level. That is, it is the risk of losing money because of change in the interest rate. The second important type of risk in investment is market risk. When there is a fluctuation in the entire market, then it creates market risk. It comprises of various factors such as recession, slowdown, change in the preference of the customers, etc. The third important one is currency or foreign exchange rate risk. Currency risk applies when you own foreign investment. It is the risk of losing money because of movement in exchange rate. Liquidity risk is the another important types of investment risk. Liquidity determines ease in converting one's securities into cash. Here, liquidity risk in investment means the risk of being unable to sell your investment at a fair price and get your money out when you want. In this situation, you may need to accept a lower price. Fifth one is concentration risk. Concentration is the risk of losing one's investment or money because the entire money is invested in one type of security. One another important type of investment risk is business risk. Certain business cycles also affect the business adversely. These can cause risk and it is generally internal to the company. Next one is inflation risk. Inflation is creating loss. Inflation affects the purchasing power of the economy which in return affect the consumption and saving. One another important type of risk in investment is reinvestment risk. Actually, it is the loss of income due to fall in interest rate when the person wants to reinvest the money. Political condition or government policy risk is another type of investment risk. Here, political condition of the country such as war, unstable government can cause risk. That means the changes in government policies can be in the tax structure, levy of duty to product, concession and reduction or compression of foreign trade relations, etc. also cause risk. The last but not least important type of risk in investment is credit risk. Credit risk means a company or an individual may not be able to repay the loan borrowed. It can cause risk in investment. Now I think all of you get a very good understanding related to various types of risk in investment. Okay, thank you for watching my video.